This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC on Tuesday cut its forecast for growth in world oil demand in 2022, citing the impact of Russia's invasion of Ukraine, rising inflation as crude prices soar, and the resurgence of the Omicron coronavirus variant in China. In a monthly report, the Organization of the Petroleum Exporting Countries, OPEC, said world demand would rise by 3.67 million barrels per day, BPD, in 2022, down 480,000 barrels of oil per day from its previous forecast. The invasion in February sent oil prices soaring above $139 a barrel, the highest since 2008, worsening inflationary pressures. Crude has since fallen as the United States and other nations announced plans to tap strategic oil stocks to boost supply, but remains over $100.
Oil prices climbed on Tuesday as Shanghai's relaxation of some COVID-19 restrictions eased concerns about Chinese demand and as OPEC warned it would be impossible to replace potential supply losses from Russia. Brent crude futures rose by $5.51, or 5.6%, to $103.99 a barrel by 13:43 GMT, while U.S. West Texas Intermediate was up $5.12, or 5.4%, at $99.41. Both contracts lost about 4% on Monday. Shanghai said on Monday that more than 7,000 residential units had been classified as lower-risk areas after reporting no new infections for 14 days, and districts have since been announcing which compounds can be opened up.
Moving on to the top news in the energy sector.
India is likely to face more power cuts this year as utilities' coal inventories are at the lowest pre-summer levels in at least 9 years, and electricity demand is expected to rise at the fastest pace in at least 38 years, officials and analysts say. Power cuts could stifle industrial activity in Asia's third-largest economy, just when economic activity was starting to recover after months of COVID-related lockdowns. The shortage of electricity as a percentage of demand has shot up to 1.4% over the last week, a Reuters analysis of government data showed, higher than the 1% deficit in October, when India last faced a serious coal shortage, and the 0.5% shortfall in March.
Russian oil and gas condensate production fell below 10 million barrels per day, BPD, on Monday to its lowest since July 2020, two sources familiar with data said on Tuesday, as sanctions and logistical constraints hampered trade. Russian oil production has been under a massive downward pressure amid sanctions from the West over Moscow's role in Ukraine. The United States introduced its ban on oil imports from Russia last month, while sanctions on Moscow's financial institutions made it hard to process payments for Russian oil. Sources said Russia's average oil output fell to 10.32 million barrels of oil per day on April 1 to 11 from 11.01 million on average in March, a decline of more than 6%. Next, we have the top news in metal markets. Zinc prices climbed on Tuesday to their highest in more than a week as dwindling inventories and shortages, particularly in Europe where record high power prices have led to large output cuts, spurred buying. Benchmark zinc on the London Metal Exchange was up 2.6% at $4,400 a ton at 16:15 GMT from an earlier $4,405.50, the highest since April 4. Prices of the metal, used to galvanize steel, hit a record high of $4,896 a ton last month. There are serious shortages of zinc in Europe. This will remain the case as long as power prices remain high, a zinc trader said. Deficits mean consumers have had to turn to inventories, which are falling rapidly.
Gold advanced more than 1% on Tuesday as Treasury yields eased after U.S. inflation data drove expectations that the Federal Reserve may not need to be as aggressive in tightening policy in the longer term. Spot gold rose 1% to $1,972.76 per ounce by 11:33 a.m. Eastern Time, 15:32 GMT, hitting its highest in nearly a month. U.S. gold futures rose 1.5% to $1,977.70. The benchmark 10-year US yield slipped after inflation data showed an acceleration in March, but less than many market participants had expected.
We will now look at the top news in the agricultural sector.
European sunflower oil prices have fallen sharply in the past 2 weeks after surging upwards after Ukraine's huge exports were cut, the head of Hamburg-based oilseeds analysts Oil World said on Tuesday. Larger than expected quantities offered for sale contrasts with lower than expected fresh demand from consumers at several locations, Oil World CEO Thomas Mielke said. There is, though, currently a wide range of prices. More Ukrainian soon oil is returning to the market, offered for sale at about $1,900 to $2,250 a ton for April, June delivery with export by truck or train via Moldavia, Romania, Poland and other neighboring countries, Mielke said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.